Things have done great, as you've mentioned, and certainly the near-term situation looks like it'll continue to be good. When we look at our recession dashboard, all the indicators are blinking green at this point. But there are a number of risks out there, from troubles in emerging markets that look to be spilling over into other countries. There is. We're concerned about inflation as the unemployment rate continues to move lower.
Are you concerned?
I don't think that's an issue for now, but I think that's an issue for next year. And then, the trade tensions really haven't de-escalated much. The deal with Mexico was great, but I think we're going to see an escalation in the trade war with China, especially between now and the midterms. So I would not be surprised to see some corrective action in September. September is typically a tough month seasonally, and you've had some historical black days in September. But I do think any corrective action that we would see, we would ultimately recover. And, we will probably end the year higher than we are today.
So, Stephen, all those positive elements that we just heard, people know this, right?
Right, exactly.
People know this. So, but I don't know when it turns from that being consensus to where it overcomes what's been kind of a bull market that hasn't really been embraced with both hands by them. It hasn't been like the most loved bull market, but I mean, these facts are out now. People know that things are pretty good.
No, it finally matters. Again, we've been saying since early in the year, this is going to be a 20% plus earnings year. We did get the boost from tax cuts, but it will continue. It's very fortunate that at this stage, when unemployment is so low, inflation is also so low. I agree that it's convincingly shown some signs of gaining, but not in a disruptive, really negative way. So that gives us a good outlook for 2019. What's really shocking, though, is how international markets have traded. Turkey and Taiwan are not the same place. You take a look around the world, backward-looking earnings over the last 12 months, ex-US are up 19%. Well, take a look at this gap in performance. We're seeing sort of implied volatility, correlation, look like crisis levels around the world. Just saw yesterday's data on the ISM, very strong manufacturing data. Well, guess what? The ISM export orders index was at 55. The world is not collapsing when our export orders index is at 55. Just take a look at 2 years ago, down in the 46 territory, when we had a significant retrenchment, oil below 30, all these sorts of things. But you can find places around the world that are trading like early 2016 again.
Well, my point right at the very beginning was that is this in the market already? I mean, who doesn't know all those positives? Is the sentiment now turned to where it's too bullish?
So I'd say that short-term indicators look overbought. Short-term sentiment indicators, the folks who are sort of looking for that next leg up from the other guy, they sell into this a little bit. No. But is this sort of, recovery is coming to an end? No.
But recovery, but that, who knows what that means for the who knows what that means for the stock market?
Our market sentiment indicators are indicating some level of euphoria here.
Euphoria.
Where, you are at risk of a short-term pullback. But, when you think about valuations, S&P 500 PE ratios started the year at 18.5. Right now, they're below 17. So they're a little bit elevated historically, but they're not really at levels that I would be concerned.
Stephanie, what is halftime decided for sentiment right now? What are most people saying? Is it too bullish yet?
No, I think it's mixed, actually. I look at two pieces of the economy in the U.S. I look at the consumer, which is 75% of U.S. GDP, and I look at manufacturing. And consumer, listen to what Target, Walmart, Estee Lauder, Costco, any retailer, even the companies that missed, they all said pretty good things about the consumer. And I think as long as that continues, and I think it will, because it is supported by good jobs, okay wages, but confidence. So the confidence is leading to spending, retail sales, auto sales, even home prices are up. So I think the consumer is good, and I think that's underappreciated. On manufacturing, 63.1 on the ISM, as Stephen just mentioned, that equates to real GDP of 4.6%. So I think that the momentum in the economy can continue. Is it going to continue to grow at what we just saw in terms of the second quarter GDP at 4.2? No, but you're probably going to do 3% in the second half of this year. Low inflation, double-digit earnings growth, and I think that can continue. And the one thing that I am looking for is capital spending. Right? Business investment. We just saw an 8% number in the first quarter. Does that have legs? And if it does have legs, does it lead to productivity, which then can extend the cycle. So that's the big question in my mind, and I think it will extend.